Welcome back to the Wall Street Podcast. Today we're doing a deep dive into JPMorgan's Global FX Strategy JPY report. It just came out August 16th, 2025.
That's right. And this report, it really gets into the details on the yen's undervaluation right now. It also looks at the near-term outlook for USD JPY, seems range-bound for now, and, the big influences. Bank of Japan policy, Japanese politics, and what investors are doing.
Okay, so let's break it down. JPMorgan, they've actually revised their end September target for USD JPY. It's up to 126 yen now. That's up from 141 yen previously. Though interestingly, they're keeping their medium to long-term targets around 139 or 140 yen.
Right, and the actual rate is still trading above what they see as fair value, about 141.9 yen. JP Morgan thinks this gap, well, it's mostly down to these domestic uncertainties within Japan.
Makes sense. What about the Bank of Japan? That's always a key factor.
Well, JP Morgan's Japan economists, they still think an October policy rate hike is coming. But the communication from the July meeting was, shall we say, less hawkish than some expected. Governor Ueda didn't really commit to timing or conditions.
So the market's probably a bit hesitant then.
Exactly. Right now, the market seems to be pricing in only about a 35–40% chance of that October hike. So that September monetary policy meeting, the MPM, it's going to be absolutely crucial for getting a clearer signal.
Okay, shifting gears to politics. The ruling coalition didn't do so well in the upper house election. That stirred up some concerns, right?
Yes, concerns about fiscal sustainability, maybe even a drift towards more expansionary policy. There was even talk, about consumption tax cuts.
But JPMorgan isn't buying into a big shift just yet.
No, they assess the probability of a major fiscal policy change as pretty low in the near term. They point to a fragmented opposition and less support for figures like Takaichi who might push for that.
And what about Prime Minister Ishiba? His position seems a bit more stable now.
Apparently so. The report mentions his support actually rose recently. NHK had it at 49% supporting versus 40% not supporting. So that might take some pressure off him from within the LDP regarding calls for resignation.
Interesting. And then there's the investor side. What's happening with Japanese retail investors?
That's quite a notable trend. In July, their net purchases of foreign equities were tiny, just 4.3 trillion. Smallest this year, even with summer bonuses. And the high-frequency data for NISA flows in August looks pretty lackluster, too.
So less appetite for foreign assets among Japanese retail. Why might that be?
It could indicate declining interest, yeah. Possibly influenced by the dollar maybe weakening a bit, and perhaps these wider de-dollarization narratives you hear about. It's a real contrast, though, because foreign investors are still buying Japanese equities pretty heavily. Meanwhile, Japanese households have actually been net sellers for 3 months straight.
Okay, let's dig into some of these points a bit more. First, the BOJ. How big a deal would a clear signal from that September meeting actually be for the yen?
Oh, potentially very significant. Given the market's low odds right now, that 35–40% pricing, a clear signal pointing to an October hike could really force a major rethink. It might trigger a pretty sharp appreciation in the yen as people quickly adjust their positions.
Right, unwinding those shorts. Now, back to the politics and fiscal stability. JPMorgan seems fairly confident things will hold steady despite the pressures. What's their core reasoning?
Their analysis really leans on the opposition being fragmented, as we mentioned, and also that the more fiscally expansionist voices within the LDP don't have as much sway right now. They seem to think that once the political uncertainty around Ishiba settles down, that itself will help stabilize things, and that could allow USD JPY to move back towards fair value, more due to political calm than any big fiscal moves.
Okay, and finally, this divergence between retail investors pulling back from foreign assets while foreign investors pile into Japanese stocks.
Yeah.
What does that tell us about broader global trends?
Well, it suggests a bit of a strategic pivot, maybe, by Japanese retail. They seem less keen on overseas exposure, perhaps driven by that weaker dollar outlook or those de-dollarization ideas. They might be reevaluating risk closer to home. But it's fascinating because it's the complete opposite of what foreign investors are doing in Japan right now. It really highlights differing views on where the value and growth potential lie globally versus domestically in Japan.
So as we wrap up, it's worth thinking about how a stable, or maybe even strengthening, yen could touch your own world. Think about the cost of things you import, maybe planning foreign travel, or even just reassessing your own global investment mix.
Exactly. JPMorgan expects USD JPY to converge eventually as these domestic issues in Japan hopefully resolve. And that convergence, well, it has real implications for businesses sensitive to currency swings and certainly for international investors weighing up Japan's market stability.